the Real Estate U podcast with Lettiann.
Hi there, and welcome back to Real Estate U with Lettiann. Today, I have on my show Jim Maffuccio. He is the co-principal at Aspen Funds, and we're going to talk about investing and what's happening in the investment world with regard to residential real estate. Jim, welcome from Monument Park, Colorado.
Yeah, it's great to be with you here, Lettiann.
So we're delighted to have you. So tell us a little bit about Jim, and tell us a little bit about the Aspen Funds. And so, we had talked a little bit about your background. You've been licensed in several states. You've had a real estate license, and then we can segue right into Aspen Funds and what you do there.
Sure. Yeah. So I've been full-time involved in the real estate world since 1986. Started when I was 5 years old. Just kidding. But I started off actually as a developer. I'd been an engineer prior to that, working in the corporate world. So I just kind of leveraged my project management skills, and I jumped into a small scale residential development in Southern California. And I also bought and sold property and for other people as a transactional business as a realtor, on and off throughout the years, throughout the decades. But for the most part, I've been involved in projects and raising money and doing deals. I kind of like to swing for the fences. And so you have really, really good years and you have some really crappy ones, frankly. So, but rode that roller coaster until about 12 years ago. And 2012, when I started a little business model that turned into Aspen Funds, hooked up with a partner in 2012, and we've been building this company. And what we do is we buy non-performing mortgages, and we work with borrowers to work those out. So we actually become the bank, so to speak. We take the lender's position, and we just solve a lot of problems and make really good money for our investors doing it, and hopefully provide a good outcome for the homeowners as well. So we've been building that company that we run these mortgage funds for the last 8 years, and we actually just made the Inc. 5000 fastest growing private companies. And so we've been having a blast doing that. We have 25 people working for us, including 2 of my kids and then 2 of my partner's kids as well. So it's kind of a family gig as well. And so we're just having a blast. I'm finally, I think this is my 3rd trip up the mountain in real estate development work and projects. And I think this time it's going to stick. So.
That's awesome. And congratulations on all your successful accomplishments. Aspen Funds, their office is your only office here in Kansas City. And what's your relationship with those here in Kansas City?
Yeah, actually our main headquarters is in Overland Park, right there in the Kansas City metro area. And we also have 6 staff out in the Baltimore, Maryland area. And up until October, we had a physical office there, but because of COVID, everybody got sent home. And so our lease was coming up in October. So we had an interview over Zoom with each one of our employees out there and asked them, so how's it working out working at home? And found out that they love it. They were being super productive. Some of them had 45-minute commutes, which Mr. Sensitive me, I didn't even really realize that they were commuting to this office we had. And I said, well, what if we just shut the office down and you guys work from home? And everybody was like, yeah, let's do that. So we closed that down. And so now we have the Kansas City office, and then everybody else is remote. And thank God for technology. We're leveraging technology, and it's worked out great. I moved, my wife and I moved, as you mentioned, to Monument, Colorado, as empty nesters, and, about 4 years ago. And I love it. I'm looking outside my window at snow on the ground still, and got the skis down from the attic and getting ready to head up for my first couple of days of skiing. So,
oh, that's amazing. So a little quick sidebar: are ski resorts going to be open this season?
Yeah, they are. They're going to limit the number of lift ticket sales, and you actually have to make reservations. But if you have a season pass, which I do, you get priority. So, and I like to go midweek anyway, so I don't think there'll be any problem.
Do you have an Epic Pass?
I do. Epic Local. Yeah.
Yeah. Cool. Yeah. Yep, I do too, but it's expired.
Right. I renewed mine. So.
So Jim, if someone were wanting to invest, and you told us a little bit about how Aspen Funds works, what is the minimum to get in? How does one invest? Are you still accepting investments? Tell us a little bit about that.
Yeah, best thing to do would be for someone just to visit our website and they can get all that information. I'm not in the capital raising side of the business. I will say this, we are only, at this point, we can only take accredited investors, and maybe most folks know what that means and maybe some don't, but you can go to the website and find it out. And the website's aspenfunds.us. But, we don't do any hard sell. We don't do training. We're not an education company. But we do. We work with private investors and some institutional investors, and it's a pretty elegant program for folks. So if they're interested, go visit the website and you'll get all the information you can.
Is the minimum amount of, if one were wanting to invest, is the minimum amount on the website there?
Yeah, and it's different for the different types of funds that we have.
Oh, interesting. So there's several packages or menu items to choose from.
The two main ones, really. Yeah.
Okay.
Yeah.
And accredited.
So we have a side of our business where we buy the non-performing loans and fix them. That would be like buying, dilapidated houses and rehabbing them and selling them. Mm-hmm. But it's like we buy dilapidated mortgages and we rehab the mortgages. And then we also buy cash flowing mortgages with our income fund. And that's more of just a mailbox money play where passive investors just, we pass a good preferred return on to our investors, and we make a spread on those assets. So
less rehab, refurbishing a loan rather than refurbishing a house, right?
Yeah, exactly.
Yep, indeed. So how has COVID affected your business?
Well, I internally and operationally, I just mentioned,
Sure.
It's actually kind of opened everybody in the company's eyes to like, wow, we can really get a lot done using technology. As far as our actual asset base and our workout operations and whatnot, it's been pretty amazing, really. We just have not had that many hiccups. We haven't had, we haven't had a lot of people even asking for forbearance. We've had a few, and of course we work with them, but it's, it just hasn't hit us that badly at all. We've just had 3 in a row of our best quarters ever. We actually doubled last quarter. So, we're just very blessed right now, and it's just, we're growing, and I talk to a lot of friends that are in the industry, people that buy and operate apartment buildings and single family residential, and even in the short-term rental Airbnb type space. And, for the most part, nobody's really singing the country western song right now. Everybody's done pretty well through this. So it kind of makes you wonder, are there really that many people sick? But anyway, it's a terrible thing for people that have been struck with it. There's no doubt about that. But as far as our business goes, it really hasn't hurt us. So we're very thankful.
What's the trend in foreclosures, or what do you see in the coming future trending in foreclosures?
Is this, as it relates to COVID? Is that what you're?
Yeah, or just COVID or not COVID, just what's your predictions or your, I know you don't have a crystal ball, but what's trending now? Mm-hmm.
Yeah, right now, actually, just in general, 30,000 foot view, like aside from COVID and everything else, there's a heck of a lot more, as you know, Lettiann, there's a lot more equity in the market right now than there has been. Mm-hmm. We really did change the way we underwrote loans coming out of the mortgage crisis with the regulations that were put in place. Plus, banks didn't want to get it handed to them again, So I think loans were underwritten more carefully. And so, values have gone up. I do think you've got some overheated markets on the coasts, but where you're located, where I'm located, my goodness. You look at the cost and the functionality of housing in the Midwest, for instance, as compares to rents, and then as compares to what people on the coast are paying. And I just don't see it going down. We're still making more people than we're making houses. And at the end of the day, that means supply and demand. So there will always be a percentage of loans that are in default, and there will always be a percentage of foreclosures. But I don't think we're in for any kind of a mortgage crisis thing. I think there will be a little bit of a wave that moves through the system from people that got in trouble during COVID. And probably it's probably kind of like the physical health aspect, where the people that are getting taken out already kind of had some issues. You know what I mean? Like they didn't really have their finances in healthy condition to begin with. And so maybe COVID was the last straw. But I don't think there's going to be a ton. I know there's a lot of late delinquencies moving through the system. I think people will get it worked out with their lenders, and we'll see some foreclosures. It'll be more of a blip than a wave. That's my personal opinion.
And I feel that more people have more equity in their home now, in their properties now, than they certainly did in 2008, 9, 10, 11, 12.
Oh, yeah.
Yeah. So we're all hopefully in a better spot with that regard. If you had any advice for a first-time home buyer, what might that be, Jim?
Buy yesterday.
Right.
I mean, it just you're going to live somewhere, and so you're either going to rent the property or you're going to rent the money. And by rent the money, I mean you're going to borrow money and buy a home, but at least nobody's going to tell you when you have to move, and you're going to be building that equity. And you may have a season, a 2 or 3 years period at some point in time where equity's going down. Although in the Midwest kind of markets, I just don't see it. Everybody's got to live somewhere. And right now you can actually rent a home. You can actually own a home for less money out of pocket in most cases in the country than renting it. And you're not going to see, well, I don't know how much longer these interest rates will prevail, but these are interest rates where my parents bought their first home, I mean, these are crazy interest rates. And then you get the tax deduction for the interest and property taxes on top of that. You buy a house, and you know what? When it's time to move up to a bigger one, you keep that house, you rent it out, and you do that 3 or 4 times throughout the course of a career. That's as a casual real estate investor, and you've got a retirement fund set up for the rest of your life, because those houses will be free and clear in 30 years, And to me, 30 years is like, I don't think in those terms anymore. I mean, but for your first-time buyers, I can't emphasize enough, do whatever you can to buy a home if you've got sustainable income.
Yes, indeed. And there's never been a better time to buy. 2.1, 2.2, 2.5. What? If they only knew that 16 and 18% were the norm back in the day. I don't think I was born yet, but
yeah, I was.
That's absolutely unheard of. Can you imagine if those interest rates went to that? So take advantage of it while it's there. Granted, the cost of the house might be a little bit more, but still at the end of the day, you're going to be far ahead. We just secured a buyer on new construction, 2.1% 15-year note. Of course, I didn't secure them, but one of the lenders we suggested.
That's crazy.
Unheard of. So your comparison to rent versus rent the money or rent the apartment, rent the money for sure. Because it's not going to last. Nothing good ever comes easy, and it's not going to last. So
right, I totally agree.
So, any closing thoughts for us, Jim? Any investor advice from the guru himself? What advice might you have for the investor? Because we've talked about a first-time home buyer. But if someone did have some equity that they wanted to invest, what are your thoughts?
Well, it depends on whether they want to be an active investor or a truly passive investor. So, like our investment funds are for absolutely passive investor. Like the only activity is you vet us out, you look at the opportunity, and once you feel that it's good, you write your check and that's it. Then all the checks come towards you. As far as investing in a rental property, I think it's a phenomenal model. I think the biggest mistake a lot of people make is they run the numbers based on everything going smoothly. And then they say, wow, I can cash flow $250 a month. And if I buy 10 of these houses, that's 20. And the problem is you really can't live off the cash flow on a couple rental houses. At some point in time, a roof is going to need to be repaired. HVAC is going to go. So keep a reserve so that you never have to lose a property, and then continue doing it, what you do, as your day job, let's just say, to generate income. And then, don't try to live off the cash flow of real estate until you have enough where there's a cushion and you actually can cover those contingencies. But I've seen more people get too stretched out and then they quit their job and I'm just going to live off of rental real estate. And you can do that. But like I said, you have to have a lot of doors before that's really a safe, way to live. So
I love what you said. And I can't imagine 2 rental properties and thinking you could live off of it. You're basically breaking even. With
Right.
those properties, you might be having a little stockpile of cash, but inevitably you need a new roof, like you said. The foundation needs repaired. Oh, now we need new garage doors. So, in my opinion,
just the turnover. I mean, just the turnover of a tenant. A tenant leaves, and if your property's vacant for 2 months, I mean, you got to figure that discount factor in when you're projecting your rent. You have to factor in a vacancy rate, and everything else. And any savvy real estate investor, and you can get the education. I'm just saying, people that are selling you the home study courses, they're not going to tell you, a lot of them aren't going to tell you the whole truth, which is you got to look over the long haul. How much cash flow did you really get from that property given the drama that is going to occur. There will be drama because it involves people, let's just face it. But it's still a great investment, but don't try to live off the cash flow when you're starting out. Now, when you accumulate, I know people that have 100 houses free and clear in Santa Barbara, and they rent for about $3,000 or $4,000 each, and just do the math on that, okay? And they all had mortgages 30 years ago, but all the mortgages are paid off now. And so we're talking about a market where the teardowns are worth $1 million. The lots are worth $1 million that these houses sit on.
We just spoke to a broker owner in Santa Cruz County this morning, and he said the same thing. The house is worth $250, but the land it's on is worth $850. So then you have to, do you really have another $750,000 to do a teardown on top of the $850,000 lot, and then you're next to a surfing shack. But anyway, I've learned so much today, and also from you. Jim Maffuccio with Aspen Funds. He's a co-principal there at Aspen Funds, and I believe it's aspenfunds.com. If you're interested
.us.
.us, forgive me, aspenfunds.us. So if you're interested in some passive investing, please check out their website and see how you might get involved there. So Jim Maffuccio, fellow Paisan, so nice to talk with you.
You as well, Lettiann.
Thank you. I appreciate your time today. And thank you for watching another episode of Real Estate U. If you like the content you're seeing, please subscribe to our YouTube channel, Lettiann and Associates Real Estate Services. And we look forward to seeing you next time.